that was extremely interesting, and I'll come back to some of the points you made later on. But first, let's hear Wale Adeosun of Kuramo Capital, both on what he does on a daily basis as an institutional investor in African jurisdiction, but also what he would expect from fellow co-investors, be they public or private, from the Northern Hemisphere.
Sure. Thank you for inviting me. Wale Adeosun, founder of Kuramo Capital. We founded Kuramo Capital in 2011. We have offices in New York City. All investment professionals are on the ground in Lagos and Nairobi. When we started this, it was based on a value proposition that evolved from my prior life at RPI, Rensselaer Polytechnic Institute. When I joined RPI in 2004 from Chicago, the MacArthur Foundation, the goal then was to help diversify the portfolio for RPI across the world. So obviously then moved into investing in China, India, Latin America. But when we moved out to China and India, there were two things we always looked for. One, could we find groups that looked like the best in class that we'd found here in the US? And then the second question was, did we have a local network that could help us navigate the local landscape? So the answer to the first one was yes. We could find groups we find people that were generally educated here in the US, maybe grew up in China, came into the US, and then went back home, and then used their local networks to give them an edge on the ground. We found those groups in China, we found them in India, we found them in Latin America. And the other thing too was, in terms of the local network, we had a trustee of the school who at the time was running the largest bank in Singapore with DBS Bank. And so pretty much every year I would make at least one trip to Singapore so he could give us his sense of what the lay on the ground was. And so it was eyes and ears. And then we said, after doing China, India, Latin America, we said, well, what was the next region that was attractive? We came to the conclusion that it was Africa at the time. And in 2006, we started investing in Africa on behalf of RPI. And by the time I left RPI in 2010, we'd committed close to 5% of the endowment and pension assets to investments in sub-Saharan Africa. And so the value proposition for today, Kuramo, is really let's go help a select group of institutional investors capture what we believe is this tremendous sub-Saharan Africa growth opportunity. We started that in 2011, like I said earlier. We put to work over $100 million. Our model is a very flexible one. We can invest in funds, we can invest in directly, we can make co-investments, we can invest across all asset classes. The goal is really to generate really very attractive risk-adjusted returns. Now, when it comes to co-investments, I think if you look at co-investments from the perspective of the GP, obviously, it generally works like he's found a great investment, probably does not have enough capital or cannot dedicate enough capital because of some of the restrictions on the fund to a particular investment, so he's looking to share that with some select LPs. The way that works is he can decide which LPs he wants to select and give that opportunity to. Some of them may be more democratic and share with everybody, but it varies. Now, if you're an LP and you're looking at co-investment opportunities, obviously, I think what typically happens to LPs, if you've already invested in the fund, one of the things that says about you, obviously, is you do not have the capacity or the wherewithal in-house to evaluate investments on your own. So obviously, you can make direct investments. But what happens is when they show you a co-investment, which is a very attractive one, you're getting to ride on the coattails of the GP as well. And in the good old days, I think when co-investments first started, there were no additional fees on the co-investment, so you could reduce your fee load overall as an investor there. I think that's changed, particularly in developed markets. It's not the case in Africa yet, but I'm sure we'll probably get there as well. So you have a chance, obviously, as an LP, to participate in a co-investment that will help you improve your returns overall. Now, and I think more investors now are looking into that as a way of boosting the returns and lowering fees. What we've done actually at Kuramo is actually done something interesting, which is actually created a co-investment vehicle that's a committed co-investment vehicle for you. So if you're looking to invest on the ground and you want to get exposure to some of the best ideas of some of the managers, you know, we have a vehicle for you that you can actually use to make that investment. Now, why will managers want to share their best ideas with us? A couple of reasons. One, what we do at Kuramo is we're early investors in a number of managers, right? So we will go in early and be an anchor to a manager. And as some of you know, if you've tried to raise a fund, it is really a tough thing trying to raise a fund. So if somebody's going to raise their hand to be an anchor, that means they should get some preferred terms. And so we generally will get those preferred terms being an anchor investor. We can also totally seed a manager, which is even take 1% of the GP as well. And so we'll do things like that and then introduce you to our local network that can also help you in terms of funds. We've done that for a few managers on the ground now. And so that generally gives us access to some of the best ideas when it comes to co-investments. I think the overall theme around co-investment is probably coming from what people are finding out is the case in Africa today. And I think it's all about deal flow. You know, we're finding that more funds are being raised to invest in Africa. And that's fine. It's still early days, but more funds are coming. And so what happens is, as more funds come, obviously the key to success is being able to find deals that are not being auctioned off. I think if you think in terms of the plethora of deals out there now, if you're looking towards the larger cap deals, they're generally going to be auction deals that everybody knows. So how do you get this edge in terms of deal flow? To get that edge in terms of deal flow, we strongly believe that the teams that are local will win the day, right? So this is going to be the guys that grew up on the ground, went to high school on the ground. They go to church on Sunday with some of the local players and some of the local companies. Those guys will have the edge when it comes to deal flow. And then their ability to co-invest or share some of those deals with you will really make the difference in terms of your returns going forward. So I think some of the savvy investors have figured out that, look, to really juice up my returns in this part of the world, I have to get exposure to co-investments. But to get that exposure to co-investments, you're going to have to find really local groups that have strong local networks with a lot of local companies. Because let's face it, private equity is a new asset class to Africa. It's a new investment type of structure to most companies on the ground. Most companies on the ground in Africa are used to debt. You give me some money, I'll pay you an interest, and you don't tell me how to run my company. This is a different structure. What we're proposing here is we're going to be your partners. We'll provide capital to you, and we'll provide some advice in terms of, help you generate more revenues. I think about really consolidation. We'll help you in terms of improving your productivity. We'll help you in terms of thinking about exits. These are all new issues to most companies on the ground. But they'll find comfort with groups that have helped them in the past, guys that have worked with them in banking on the ground in prior lives. And so that's the trend on the ground, and that's why I guess the emphasis is on co-investments.
Thank you, Wale.
Doing business in Africa. You can't afford to be without Africa Investor.